We have a very exciting video to get into, including new numbers as far as the amount of FSD buyers for the Cybertruck. If this number is correct, Tesla stock is going places in 2024. And this would be great news. Now, on top of that, we are going to discuss the ongoing strikes, what kind of effect that is having on the economy, as well as next week, you could see a pretty big event, and that is the FOMC press conference, but really the summary of economic projections. I want to give you an outline on what to be looking for and what the markets are going to react to. We're going to look at the last one and compare that to potentially what could come out this time. We are also, on top of that, going to get into some of the technicals with Tesla and also look at the dollar amount that is sold short in Tesla relative to other big tech names like an Apple, a Microsoft, Nvidia, many other names, just to show you the sheer degree of shorts that are in Tesla is off the charts. So we're going to go ahead and get into all of this information. If you own Tesla stock, hit that like button. Let us know this is a roll call for all Tesla stock investors, as well as subscribe to the channel if you want to stay up to date with everything that's going on every day with Tesla stock and the broader markets. The Tesla Cybertruck appears to have surpassed 2 million customer reservations, according to a community-run Google Sheets reservation tracker created after the truck's unveiling in 2019. At the time of writing, the sheet shows that 47,326 of the reservations were self-reported, and those entries can be seen under the page's Cybertruck and other reservation tabs. The data is based on a combination of self-reported reservations, the block of reservation numbers used, and some of Tesla CEO Elon Musk's own statements. According to the sheet's Q&A tab, based on the number of reservations, the sheet also estimates a potential revenue of $152.13 billion and as much as $201 million in deposits alone. But what I really think is exciting is this. In addition to trim percentages, the Google Sheet also includes data on reservation holders who added full self-driving to their Cybertruck purchase, representing just over 67% of the reservations. Out of the Cybertruck single motor, dual motor, tri-motor, and quad motor trims, the dual motor is the most popular, with the tri-motor trailing behind as the second most popular. So let's do a little bit of simple math. If Tesla is able to deliver 100,000 Cybertrucks next year, and roughly 67% of them have full self-driving, that would be 67,000 Cybertrucks with full self-driving. If full self-driving continues to stay at $12,000, that would be a net kind of boost to Tesla's bottom line next year of about $804 million. That's pretty substantial. If Tesla can deliver more than 100,000 Cybertrucks, which a lot of people are targeting like 200, 250,000, the numbers can vary obviously a lot, but there's 2 million reservation holders. We don't want to wait 5, 6, 7 years for these Cybertrucks, okay? So Tesla's job is to ramp the output to get as many out there as possible. So I think 100,000 is pretty dang conservative, probably closer to 200,000. Anything to 250 and higher is your best case scenario. That's a little optimistic, but I think 100,000 is pretty conservative. And that's still almost $1 billion to the bottom line. That would add about 30 cents to Tesla's EPS next year. And when Tesla's estimates are 7% delivery growth, 29% EPS growth, far lower than what we have seen over the past 3 years or so. Well, this added information, well, it could mean Tesla stock is going places in 2024. And this is not kind of priced in by analysts today. Analysts are paying no kind of attention to Cybertrucks or potential sales of full self-driving in these Cybertrucks, especially the initial reservation holders. I think it's pretty clear if you got your Cybertruck in 2019, if you are a diehard Tesla fan and you were following the Cybertruck at that time, a lot of those initial reservations probably purchased full self-driving. So it could be even higher than 67% in the first initial year. You could be closer to 80% full self-driving on the first initial couple 100,000 Cybertrucks. That's also a variable change that unfortunately we cannot account for, but we can basically assume to be correct. Also in the news, the new Highland Model 3 is expected to arrive at Tesla stores within 5 days, starting in Shanghai. Now, the Model 3, the new Highland, has been produced in Shanghai, but only just a couple of days ago did Tesla actually get the permits to allow this vehicle to be sold in China. So that should help to boost some of the numbers for Tesla this quarter a little bit, but really for Q4. It is confirmed the Cybertruck fits through a Chick-fil-A drive-thru, and there's going to be no shortage of God's chicken in your Cybertruck. 19 hours ago, Tesla North America started a new program again. It's not really new, they're just bringing it back, of factory tours for the Austin Gigafactory, as well as they added this for Fremont as well for 15,000 credits. And just a couple of hours later, within the course of 4 hours, well, they were out of stock. So it seems like a lot of people are interested in touring the Giga Texas factory. Specifically the Giga Texas factory. Ford has officially announced they are laying off 600 employees at its Michigan assembly plant. This is due to issues related to the strike. As Sawyer Merritt says on Twitter, I think he says it quite perfectly, Ford, GM, and Stellantis are in a lose-lose situation with the UAW. If the strike goes on for a while and more plants shut down, no cars will be made, costing each automaker potentially hundreds of millions per week. On the other hand, if the UAW gets even close to what they want, Ford, for an example, will see their UAW-related labor costs roughly double overnight. Their UAW labor costs were already higher than Tesla's non-union cost, even before these new contract negotiations started. This is a tough situation as the transition to a full EV lineup is already proving to be very expensive for these legacy OEMs. Ford and GM are already losing many thousands for every EV they sell, and it's going to be a couple of years before they might see even a small profit from selling them. They aren't vertically integrated, and their manufacturing processes are very inefficient compared to Tesla. The Cybertruck is coming out soon, which will put even more pressure on them. Ford, GM, and Stellantis are going to come out in a much weaker competitive position when all of this is over. I don't want to sound too dramatic, but it kind of seems like they are screwed in this situation. Not only is Ford, GM, and Stellantis screwed, but potentially even the workers that are on strike. I mean, you're striking against your employer, but what you're offering your employer is going to bankrupt them. It's not going to bankrupt them tomorrow. It's not going to bankrupt them next year. 3, 4, 5 years down the line, they're going to be in a really bad position. Now, in the short term, well, GM's CEO just said, like literally last night, that for every one GM job, there is 6 other jobs that depend on that one GM job. That is dealerships. That is detailing. That is working on the vehicles. There's so many other parts makers. There's so many other things that are going on to support the auto industry. This is having a big effect on the economy already in just the last 2 days or so. If this continues on, which it does not look like it's going to be over quickly, someone's going to have to cede up a lot compared to where the offers are and where they need them to be. Well, it's not going to be over quickly. And if you're talking about just even 11,000 workers just went on strike, well, that potentially means 60,000 workers are being directly affected by the first round of strikes. That's not to mention if 140,000 UAW employees ultimately go on strike. Then you're talking over 500,000 jobs. and then you have a major problem. This is one of the reasons why the markets were in deep red territory on Friday. The Nasdaq dropped 1.5%, S&P 500 dropped 1.22%, the Dow dropped almost 1%, and the Russell 2000 dropped a little bit over 1%, whereas the VIX soared 7.5%. So there was quite a bit of fear on Friday. Friday was also quad witching, and what we tend to see happen after quad witching is stocks sell off. The sell-off usually doesn't happen in the beginning of September. It's after quad witching. Considering you were down almost 2% on the Nasdaq, this quad witching, it shows that $3.5 trillion of notional value that expired on Friday is probably getting rolled over into a lot of hedges, a lot of downside protection, shorting stock. That could mean more downside from here. The big event that we have next week is on Wednesday. That's when we get the Fed press conference. That's when we get the summary of economic projections. So the summary of economic projections is basically what the Fed members see as the GDP going ahead, the unemployment rate, a bunch of different kind of data points in the economy. It gives us a viewpoint into what they are expecting, essentially. And they use this summary of economic projections to some degree to try to mold market expectations as well. For an example, take a look at the last summary of economic projections. The March projection, which was 2 summary of economic projections ago, was for GDP in 2023 of 0.4%. That's pretty close to a recession. Well, in June, the economy started to look a little bit better. So the Fed said they expected 1% for the GDP in 2023. The Fed expects 1.1% for GDP in 2024 and 1.8% for GDP in 2025. But what's interesting is during the last summary of economic projections compared to March, they lowered their long-term expectations for GDP. The March projection was 1.2%. GDP in 2024. In June, they lowered that to 1.1%. In the March projection, GDP estimates for 2025 was 1.9%. The next summary of economic projections, they lowered that to 1.8%. Now, coming on this summary of economic projections, given the Fed raised their GDP outlook for 2023 and they lowered their outlook for 2024, the big question is no longer 2023. Nobody cares about 2023 as much unless the Fed were to come out with a crazy negative expectation for GDP, which mathematically speaking does not look that likely given we've seen positive increases to GDP in the beginning of 2023. You would have to see deep negative GDP numbers to get, a negative overall 2023 GDP number for the next 2 quarters, for Q3 and Q4, which is not going to look likely. 2024, on the other hand, is where the estimates could come down, and 2025 for that matter. Markets right now are forward looking to 2024. So your big risk factor for this week that could kind of startle the markets, even heading into the summary of economic projections, and depending on what these numbers come out, startle the markets even more potentially after, is does the Fed start to expect really low GDP estimates for 2024? I would argue yes. The GM strikes, puts a lot more pressure on the economy. The restarting of the student loan payments. I heard only 15 million Americans signed up for the SAVE program. So a vast majority of Americans, about 70%, are likely to start making their student loan payments on October 1st. This puts a lot of pressure on the economy. On top of just the inflationary costs that have eaten away purchasing power and made it very hard to even support yourself. I mean, look at the personal savings rate. It's at 3.5%. This is near historical lows. The last time you were this low was in 2005 when the economy was booming. The question you have to ask yourself is the personal savings rate this low at historically low levels because the economy is doing well and people are spending all of their money? Or is the personal savings rate this low because people just don't have the money to save? That's the kind of dilemma I'm faced with now. I don't think the economy is doing so well. People are just spending all of their money and not saving it. I personally think the cost of living is so high right now that you cannot afford to save money. And that's why the personal savings rate is low. You've never been where we are now as far as high inflation with the personal savings rate this low. Back in 2005, inflation was not a problem, and the personal savings rate was low. You could argue the economy was doing well. People didn't think they needed to save that much money. Inflation was low again. People were doing fine. Now, not so much. Now back to the summary of economic projections. Now the unemployment rate is another data point that Fed members give their opinions on over the next 2 years, essentially, for 2024 and 2025. Now for 2024, the Fed in the March projection expected 4.6%, and in 2025 expected 4.6%. This is the unemployment rate. This is the thing that everyone was looking at like, hey, if the unemployment rate goes from 3.5% to 4.5%, we're going into a recession. The market's freaked out about this once before. Now, during the June projection, they actually lowered their 2024 and 2025 unemployment rate estimates to 4.5% and 4.5% for 2024 and 2025. So the Fed actually got a lot more optimistic the last summary of economic projections in June, and this will be another big thing to be watching. Does the Fed think unemployment is going to go higher again? Do they revise their numbers to 4.7 or 4.8%, or maybe even 5%? 5% would be pretty bad. I think the markets would hate to see a 5 number for the unemployment rate. For core PCE inflation, during the March projection, the Fed officials expected 3.6% by the end of this year. They updated that in June, and now they expect around 3.9% for core PCE by the end of this year. For 2024, the Fed stays pretty consistent at 2.6%. in their March and June summary of economic projections. And in 2025, they actually raised this from 2.1% in the March projection to 2.2% in the June projection. What the markets are also going to pay very close attention to is the Fed funds rate March projection through until the September projection. So what I mean by that is the March projection, the Fed expected the Fed funds rate to end this year at 5.1%. The markets really freaked out about this last time because during June's summary economic projections, the Fed expected 5.6% Fed funds rate by the end of this year. Remember that whole dilemma where markets were saying we're going to get 2 more rate hikes? Well, yeah, that was because of the summary of economic projections. Now, during the March projection, the Fed expected 4.3% Fed funds rates in 2024 and 3.1% Fed funds rates in 2025. At the June summary of economic projections, the Fed now expects 4.6% Fed funds rates in 2024 and 3.4% Fed funds rates in 2025. Now, if the Fed comes out and expects maybe 3.5% Fed funds rates in 2024, that's going to tell the markets the Fed is now firmly expecting a recession. Or even if this were to drop to like 4%, that would be what? We're at 5.5%. That would be 6 rate cuts to get to 4% Fed funds rates by the end of 2024. That would probably be because we have a problem on our hands. So that's something the markets will be wanting to watch very, very closely. And I think it's safe to say, given what is going on in the economy, go to your restaurants, go to your stores, read earnings calls from Dollar General, from Walmart, from Target, from any other retailer, essentially. They're all telling you the same thing. People are not spending money on things they don't need. Ken Griffin, 2 days ago, just said the economy is very quickly heading into recession. He controls 30% of the trading activity in the markets. or is the market maker that facilitates the trading activity, I shall say, for about 30% of all shares that trade hands. If anyone's going to know we're going into recession or not, it's him. And that was before the UAW strikes even happened. So there's not great things to be said here. We just don't have any confirmation from the Fed, right? What the Fed expects to do with interest rates, what the Fed is expecting unemployment rates to do. But here, next week on Wednesday, we are going to get a lot more clarity. So this is going to be a massive event. I can't imagine it's going to be a good event. Just, again, given what's going on in the economy. Markets love when rates go lower. But why are rates going lower? That's what I expect. I expect the Fed's going to say, well, now we're going to cut rates more next year. We're going to cut rates more in 2025. That's great for the cost of capital, for growing businesses. But it's not great if it's because we're in a recession. So in summary, the GDP expectations from the Fed will be very important for 2024 and 2025. Again, the markets don't care about 2023 anymore. If you were to see, which I don't expect, a massive decrease in the Fed's funds projected rate by the end of this year, if that were to just fall off a cliff, then the markets would probably crash pretty instantly. If we go from 5.6% at the last summary of economic projections by the end of 2023 down to like 4.5%, the markets are going to say that means we might get double rate hikes or double rate cuts back to back. Something just broke. The Fed knows something they're not telling us. In other words, I don't expect that to happen, but I do think it's possible that the Fed now sees much lower rates than 4.6% in 2024. And that would be one of the big things to be watching on this summary of economic projections. Now, if you don't want to watch the summary of economic projections, go through this whole chart, just subscribe to the channel, and we will keep you up to date here next week. Now, as far as Tesla on a technical basis, it looks very good. We're going to be prone to bad news or good news that happens for the markets. Unfortunately, I think the risk to return in the markets themselves are very unfavorable, especially for stocks that are trading at their all-time highs. Like, let's be honest. And Apple is trading higher than it was still in 2021. It's not quite at its 2023 highs, its all-time highs, but you're still trading higher than your previous highs in 2021. Microsoft still trading higher than its previous highs. Nvidia way higher than its all-time highs. A lot of those stocks are just don't look good on a risk to reward ratio. Tesla, on the other hand, I'm a lot more bullish on because you're still down over 50% from all-time highs. Good things are not priced into Tesla stock. You can see that by the amount of shorts that are in this stock. And Tesla has a lot of positive things coming. So in the short term, if you get market weakness, obviously it will affect Tesla stock negatively. But I am very bullish for 2024. I'm very bullish for the end of this year heading into 2024. I think there's a lot of funds that are going to buy Tesla stock. Tesla is one of the most, is the most under-allocated big tech stock out there. And don't be confused. Tesla is an automaker, but it is a tech company, as Morgan Stanley just said last week. So let's get into some of these technical factors that make me pretty dang bullish. The first is something I talk about quite often now here on this channel, is the downtrending line of resistance. And this has been going since November of 2021. I've had this on the chart for like 2 years now. And you basically just broke above it again. But you're like holding strong support at this level. And that level is around 272. You went under it at one point Friday, and then Tesla bounced instantly. The trading algorithms are supporting the stock above this line. When you're above this line, you're kind of in no man's land to the upside, not to the downside. That means you can rally quite aggressively on any good news. Just technically speaking, you're in a prime position above this line. Now, if you also look at some other factors like the MACD was recently quite negative and went positive. When this has happened any other time in Tesla's past, you have seen a very aggressive rally in the share price of Tesla. It's simple. And then the RSI, that is at 61.65. Given the rally that we have seen recently, you still have a lot of room to make that upside move. You're not overbought yet. Even if Tesla stock does go overbought, it can stay overbought for quite a while. And what you're actually seeing with the RSI is kind of a basing out here in the low 60s, even though Tesla stock continues to trend its way higher. These are all very positives on a technical basis. If you also look at the dollar amount that's sold short in Tesla stock at $23.25 billion, compare that to companies that have much larger market caps than Tesla, like an Apple, sitting with $17.56 billion of short positions, about $6.5 billion less than Tesla, with a market cap that is 4 times what Tesla's market cap is. That kind of shows a lot. Microsoft has a market cap of about $2.5 trillion and has short positions worth about $13 billion. Tesla has $10 billion more in short positions than Microsoft, but is again trading at 3 times less than the total market cap of Microsoft. Even if you look at Nvidia, which is at all-time highs, and some people think their numbers are cooked, not even real. Look at Nvidia's dollar amount that's sold short. $12.2 billion, which is 11 plus billion less than Tesla. So when you think about it like that, if Tesla does get good news and people start to get more bullish on Tesla, you could see very big rallies in Tesla stock. Tesla is very underowned, and there's a lot of short positions currently on Tesla. Just like we've seen with the Morgan Stanley note, that rally Tesla stock, 10%. And I expect once we get the Cybertruck deliveries, once we get more information about FSD reservations, specifically in the Cybertruck, that's going to be very positive for Tesla heading into 2024. And then when Tesla beats estimates in 2024, as I strongly expect they will, the estimates are very recessionary-like estimates, Tesla stock's going to see a lot of upside. And people are probably, I would imagine, going to figure out Tesla stock is going places in 2024. So that is going to conclude this video. Hit the like button and subscribe to the channel. If you made it to the end of this video, leave your opinions down below in the comment section. How do you feel about the economy? How are you seeing things out there? What do you think about the Fed FOMC meeting next week? What do you think about the dot plot? Do you think it's going to show a dramatic decrease in expectations for GDP next year, for the federal funds rate next year? Do you think the Fed's basically going to price in a recession next year? Or do you think quite the opposite? Estimates are going to stay the same. That's really the big thing that's going to move the markets over the next couple of weeks. I'm really curious on your opinions on that, so leave them down below in the comments section. If you guys want to come hedge out your portfolios, we are actively hedging out there. This is not the time to be fully invested in stocks that are at all-time highs, in my personal opinion. If you want to come hedge out your portfolios with us, come get access to all of the trades that I make in real time. Link down below in the description of this video. We will welcome you with open arms. That's going to do it for this video. My name is Michael Tyler, and I will see you in the next one.